Hey, what's up, everyone? Welcome back to my world of stocks. Hope you're having a great weekend so far. So, as most of you know, we first had Microsoft partner with OpenAI to bring ChatGPT to the masses, which of course skyrocketed in popularity. Then they launched Bing AI for themselves. Google launched Bard and later upgraded that to Gemini. And now we have Microsoft Copilot, which, in my opinion, might just be the most important artificial intelligence to date because it's literally being implemented into every computer out there that uses Windows, which of course Microsoft owns that too. But it's just this cool little like AI assistant right in the bottom corner of the screen that you can tap on at any moment to immediately get access to artificial intelligence, which is not only super convenient, but it's also pretty robust, and I think it's exactly how Microsoft should be leveraging AI and all of their investments into that by implementing it into their own products as well. I think it's going to be an absolute game changer for Microsoft, and I think it certainly makes the stock more attractive too. However, I'm not here to actually talk to you about Microsoft stock. Instead, I asked Copilot myself for what stocks it thinks would be a good buy, and I asked specifically for 5 of them to buy here in 2024. So this is going to be a ton of fun. It's always really interesting to hear the perspective of an AI on what it thinks are some good investments out there. But of course, I got to be the judge at the end of the day of just how good these stocks are. So I'm going to give you my own opinion on each one of them. And what the heck, I'll even rank them from best to worst too, based on my opinion, because we like to do that a lot on this channel. It's always a lot of fun, makes it a little more interesting too. So let's go ahead and do that now. I chose the middle, more balanced option, and I phrased my question like this: what are the 5 best stocks to buy in 2024? Give me simple reasons why you like these 5 stocks as long-term investments. Don't give me valuations or prices, as I can look those up myself. Just give me at least 3 major reasons why you like each stock, with more bullet points and details under each headline. Go in depth with your reasoning. Remember, I am asking you for 5 stocks with at least 3 major reasons and subpoints and details for each. Thank you. And so then it responded with, certainly, let's delve into 5 stocks that show promise for long-term investments in 2024. I'll provide detailed reasons for each, focusing on their strengths and potential growth factors. Remember, these are not financial advice, but rather analysis based on available information. Okay, so it all sounds good. Let's go ahead and jump into these. So starting with stock number 1, Copilot gave us Alphabet, or I just refer to them as Google, but that's ticker symbol GOOGL, which is kind of funny because the last time that I asked Google's Gemini for 5 stocks, it actually gave us Microsoft, and now Microsoft is giving us Google. So it's kind of interesting. I think the AIs might just be trying to like not look too biased by recommending their direct competitors instead of their own companies. So I think that's kind of interesting. But anyway, for Google, Copilot gives us the first point here of dominance in digital advertising, saying Google's advertising platform is unrivaled, capturing a significant share of the digital ad market. YouTube, a subsidiary of Alphabet, continues to grow as a video sharing platform, attracting both users and advertisers. And the company's data-driven approach allows targeted ads, enhancing ad effectiveness. And yeah, those are all points that I strongly agree with myself, as Google has dominance in some of the largest internet markets out there, which Copilot specifically mentions YouTube as being one of their biggest strengths. Well, there alone, they command billions of monthly active users. In fact, it's more than a quarter of the world's entire population using YouTube. And so when you add all of these different things up, Google comes out with almost 40% market share of the entire worldwide digital advertising market, which is just absolutely incredible. The next point, though, is cloud services growth, saying Google Cloud is gaining traction, competing with Amazon Web Services and Microsoft Azure. Also says enterprises are increasingly adopting Google Cloud for its scalability, security, and AI capabilities, and a diversified revenue stream from cloud services reduces Alphabet's reliance on advertising. And yeah, I mostly agree with this one too. When it comes to cloud, I like the dominance of Amazon and the combination of both size and growth of Microsoft Microsoft a little bit more. But in third place, I do think that Google is another great alternative in the cloud market, which should continue to benefit them with more growth opportunities long term. And then finally, CP notes innovation and moonshot projects, saying Alphabet invests in ambitious projects, e.g., Waymo, Verily, and Loon, that could be game changers. These moonshot ventures provide long-term growth potential beyond the core business. And yeah, this is another great point here because it's what I've always been saying about Google myself too, that despite their already massive size, I think they've done a great job of staying innovative and investing in disruptive technologies too, which Copilot mentions a couple growth opportunities in Waymo, for example, which is one of the largest autonomous driving players in the world, and Verily, which uses artificial intelligence for healthcare and data management. Again, both are very innovative and even disruptive. Anyway, overall, I highly agree with CP's first choice here because Google is actually one of my favorite stocks in the entire market right now too, and despite them trading near a record high, I think having about the same PEG ratio as the sector makes it a great combination of not just size and growth, but maybe even a little bit of value there too, if you can believe it. And it easily gets the number one ranking from me, at least until I see what else is on this list. Speaking of which, moving on to stock number 2, Copilot gives us Visa, ticker symbol V, which is another stock that I own myself too, but CP had this to say about it. First point, global payment network, noting that Visa operates a vast global payment network facilitating secure transactions. As digital payments surge, Visa benefits from increased transaction volume, and partnerships with fintech companies and e-commerce platforms drive growth. And yeah, it's a great point there. Visa is not only the number one market share leader of credit cards, but also purchase volume, meaning that it has the largest size and dominance really, and just as important, the acceptance rate with merchants that will translate over to very strong and stable financials, and that's been the case year after year. The next point though is shift to cashless society, saying Visa's brand recognition and trust position it well in the cashless transition. Contactless payments, mobile wallets, and online shopping drive adoption, and expanding into emerging markets taps into the unbanked population. Well, as much as I hate to admit it, we are slowly transitioning into at least more of a type of cashless society over time, and I would argue that as a market leader with many different digital payment options, Visa is well positioned to benefit from much of that change. And when it comes to emerging markets, that's another point that I've always made for Visa too, in that it's really where most of their growth is going to be coming from, and currently it's at a double the rate of their growth. So it's a very important catalyst for Visa's continued expansion, and so I highly agree with that point there as well. Anyway, the last point here, CP notes resilience and recurring revenue, saying Visa's business model relies on transaction fees providing stable income. Even during economic downturns, people continue to use payment cards, and ongoing technological advancements ensure relevance. Well, yeah, this one too is another big reason for why I've invested in Visa, because unlike banks, Visa doesn't have to worry as much about people defaulting on their loans during a weak economic period, as they really just facilitate the payments that are made on their network, and then they get to collect fees from them. So like I showed you earlier, financials tend to be pretty reliable, and even during this troubling economy that we're in right now, well, analysts are still projecting revenue growth of over 20% this year and another 10% plus next year as well. That's really impressive for what is already the largest market share leader to still be growing at a double-digit rate like that. Granted, the stock is trading near an all-time high, but it rarely ever dips to begin with, so I don't necessarily see that as too big of an issue. However, the bigger problem is the rich valuation in general, because it trades for a PEG ratio of almost 1.7 when the sector median, I believe, is like around 1.2. So it doesn't leave a whole lot of room there for upside in my opinion, but I still think it's a very solid and reliable long-term investment, so I'm gonna rank it around the middle for now at number 3. Moving on to the third stock, though, that is recommended here by Copilot. Well, we have Salesforce, ticker symbol CRM, which is the first stock on the list that I do not own myself, at least not yet. But here's what CP had to say about it. So first point, cloud-based CRM dominance, noting that Salesforce is a leader in cloud-based customer relationship management, CRM. Its platform offers sales, marketing, and service solutions. Subscription-based revenue provides stability and scalability. And yeah, I mostly agree with those points there. Salesforce does have a pretty strong business in some of the largest and most important markets in the world, like cloud computing and digital marketing. In fact, they're already the fifth largest cloud provider, only behind four giant behemoths in Amazon, Microsoft, Google, and Alibaba. And yet, their market share is only around 3%, which means there's plenty of room to keep growing there, which is very likely to happen since they provide such a high in demand service, helping other companies all around the world through the cloud with solutions and services related to customer service, digital marketing and sales, cloud computing, and all kinds of automation apps, most of which use AI to increase effectiveness. For example, they've shown to reduce costs and increase sales by close to 30% on average. And with 98% of customers either meeting or exceeding their return on investment goals, well, CRM has been a very popular choice to partner with. The result being strong financials and reliable growth, with more than a 20% average EPS growth rate over the past 5 years and another 15% plus expected over the next 5 years as well. In the following point though, CP notes an expanding product portfolio, saying Salesforce acquires complementary companies, e.g. Tableau and MuleSoft. It also says diversification into analytics, integration, and AI enhances its offerings, and the shift toward digital transformation benefits CRM adoption. And yeah, all things that I agree with there too, especially integrating new services and artificial intelligence, like for example, how they're using it within Slack, which is also owned by Salesforce. It's kind of like, I don't know, I think of them as like the Discord of business productivity. Like tons of companies use it to help their workers stay connected, which is really huge for the digital age especially, and it all makes CRM that much more valuable. But then finally, CP notes strong customer base and renewals, saying enterprise clients rely on Salesforce for mission critical operations, high customer retention and recurring revenue from subscriptions, and Salesforce's ecosystem of partners and developers add value. Another great point there, as they already have a giant customer base of over 150,000 businesses from small to large using them, and they're across practically every industry out there too, which I think all of it is just going to continue to grow over time as well. It's a great company, guys, and I would love to own the stock myself too. I just regret not having bought some during a recent giant dip. But even here, I mean, the valuation really isn't as bad as I expected it to be, with a PEG ratio significantly lower than both the sector and their own 5-year average. It's going to be really tough to grade this one because I feel like they're about tied with Visa at this point, but I guess I have to give Visa the slight edge because I do already own that one, even though I'm getting, pretty tempted here to buy some CRM too. Anyway, I'll push Visa up to number 2 and put CRM just barely behind them at number 3. Anyway, that'll leave us now though with the final 2 stocks on the list. And coming in at stock number 4, well, CP gave us the almighty Apple, ticker symbol AAPL, which had this to say about it. First point, ecosystem synergy, noting that Apple's tightly integrated ecosystem, iPhone, Mac, iPad, Apple Watch, it fosters customer loyalty. Cross-device compatibility encourages users to stay within the Apple ecosystem. Services like Apple Music, iCloud, and the App Store contribute recurring revenue. And yeah, those are all great points there. Apple has one of the stickiest businesses and really most loyal fan bases in the entire world, and their diversification into services, especially subscriptions, ensures that they'll continue generating giant financials on both the top and bottom line, doing around $400 billion and $100 billion respectively just last year alone. That's almost unmatched by any other company out there in the entire world. For point number 2, though, CP notes innovation and product pipeline, saying Apple consistently launches new products, e.g. iPhone, AirPods, and Apple Watch, It also says upcoming innovations like AR glasses and electric vehicle offer growth potential, and strong R&D investment ensures a robust product pipeline. Okay, now I do agree with most of that. However, there are some issues worth noting, like the fact that the electric vehicle has been rumored for years without much traction, and the AR glasses are super expensive, which I don't think can reach a mass market at that price point. And overall, even Apple's financials have been really starving for growth in recent years because of their already massive size, with only a low single-digit revenue growth rate expected in each of the next 2 years as well. So unless they do something much more innovative soon, I think Apple will continue to struggle to grow at this size and just really kind of continue being more of an already very large and profitable company, which isn't necessarily a bad thing, but I'm just saying there's maybe not as much growth as you might want. As for the final point though, CP notes financial health and buybacks, saying Apple has substantial cash reserves and generates strong free cash flow. Share buybacks enhance shareholder value by reducing outstanding shares, and dividends provide income to investors. And yeah, those are all great points there too. In fact, just a gigantic balance sheet and share buybacks alone make this stock worth investing in for most people. However, it should be noted that the stock is currently near an all-time high, and with revenue growth slowing way down, I'm just not sure how much room is left to run until they release something more exciting, like maybe a folding phone. I do think that would probably sell very well. Anyway, it's a tough one to rank at these levels because I think Visa, Salesforce, and Apple all have certain advantages over the others, but because I own Visa and Apple, I just kind of feel like I would have to rank them higher than Salesforce, even though I like all of them for different reasons. Anyway, that'll leave us now though with the fifth and final stock. And coming in at number 5, well, it's going to be Adobe, ticker symbol ADBE, which CP noted creative software dominance, saying Adobe's Creative Cloud suite of Photoshop, Illustrator, Premiere, it's industry standard. Creative professionals rely on Adobe's tools for content creation, and subscription-based model ensures recurring revenue, which I do agree with all of that, especially because as a YouTuber, I too use Adobe software all the time, so I have a very clear understanding of just how useful their tools are for content creation. But you don't have to take my word for it, as Adobe is already the #1 market share leader in areas of design, editing, rendering, and application development softwares, while their Creative Cloud subscription suite generates recurring revenues for them, leading to strong financials every year, with still another 20% and 11% revenue growth rates expected in each of the next 2 years as well. Second point though, CP says digital marketing solutions, noting that Adobe's Marketing Cloud offers analytics, personalization, and automation. As businesses prioritize digital marketing, Adobe benefits, and acquisitions, e.g. Marketo and Magento, expand its marketing portfolio. And yeah, I agree with that too. It's actually not so well known to the public, but Adobe is also a specialist in digital marketing, analytics, and even commerce. And so when you combine their products with cloud, and some recent acquisitions and even artificial intelligence, well, it makes them a standout choice in an otherwise crowded market, which I think they'll continue to grow these businesses out much larger over time too. So it's all very positive there. But finally, CP gives cloud transition and document services as the final point, saying Adobe's shift to cloud-based services enhances scalability and accessibility. Document Cloud, Adobe Sign, and Acrobat simplifies workflows, and strong financials and customer loyalty support long-term growth. Again, I agree with that, especially on customer loyalty. Like I said before, I use a ton of Adobe products and services myself, and it's very well known in these fields that Adobe is really considered the best, and it's what everyone wants to use. It's kind of similar to like how NVIDIA, really dominates the high-end GPU market. Everyone knows that NVIDIA has the best GPUs if you want the highest quality and performance, and I think the same can mostly be said about Adobe, which also leads to that stickiness of their business. And despite the stock soaring over the past decade, a recent little dip has at least sunk their PEG ratio to below the sector and well below their own 5-year average too, so it might not be the worst time to actually pick up a few shares right now as well. However, I think I still like Salesforce just a tad bit more, but honestly, I can't believe I had to rank Salesforce and Adobe in last place here when they're actually very good stocks. But that really just shows you that this was actually a pretty good list here from Copilot. And Granted, they might not be the most exciting stocks out there, and apart from Google, I probably wouldn't consider these to be the absolute best stocks to purchase at the moment either, but I do think that they're very solid overall, and they would make great additions to almost anyone's diversified portfolio for the long term. So I'm not going to knock this list here. I would give it a pretty high rating, probably like a B plus overall. I think CP did a pretty good job on this list, and apart from there not being much in dividends, it's a pretty diversified offering too. I do think it could use more in dividends. I mean, I know Apple pays when it's so small, it doesn't really matter. But, if it did have some more dividends, I think that would help a bit more because I do love dividend stocks myself. But again, overall, just a very solid list here. Can't really go wrong with it. I think they, Copilot did play it a little safe, but hey, sometimes, safe works because, like I said, this is a good list here. Anyway, what do you all think about this list here? Do you like any of these stocks? Do you own any of them? And do you agree with my ranking? I'd love to hear your thoughts. Drop them down there in the comment section. But thanks again for stopping by, my friends. I hope that you're all doing well. I hope you enjoyed the video, and I will catch you in the next one. All right, take care, everybody. Bye-bye.